Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 22nd of April. Rather quiet day, so we're just looking at maybe the best setups that we can find given the conditions. First up is African Pioneer, where it looks as though we're in a rising trend channel from back in August. The highlight here just in the last, this week really, just the way that the 200-day moving average currently around 2.67 pence is starting to rise, which could be a momentum trigger for the shares. So while they're above that line at just under 2.7 pence, we're looking for as high as 5.5 pence over maybe the next 2 to 3 months. Give it a bit of extra time there. We've got a bullish divergence line there from back in July last year. But the benefit of that is that even though the shares actually made new lows back in December, slight new lows, the RSI was still heading in an upward direction, which is the bullish divergence and can be useful in terms of predicting a move to the upside. Another situation which has bullish divergence is Blackbird. Here we've had an extended decline from the beginning of the year, but that new lower low, slightly lower low that we had at the beginning of this month was not matched by lower RSI, so that could suggest that we're finally going to have a turnaround here. Clearly there's some resistance, the initial resistance for April around 17.7 pence. End of day close or a weekly close above that could be enough to get the shares to fill the gap up towards the low 20s, which was seen back in February. But just the first sign there that the shares are going to give us a turnaround. And the final thing to note also that today's unfilled gap to the upside is yet unfilled, and that can also be a turnaround signal. Obviously, we don't want the shares to make fresh lows below 15 pence anytime soon. On to one of the most followed stocks around, Genedrive. Here we had the turnaround there around 14 pence with the snapping of that resistance line there from January. We've had bullish divergence as well, so with the lows, or the fresh lows for March, but a higher RSI. And that could yet be enough to cause the shares to break the December resistance line around 33 pence. And take the stock up towards the resistance line projection from back in December as high as 56 pence if we can break 33 pence over the next week or two. The other positive, apart from the bullish divergence, is the way that the 50-day moving average has been rising since the end of March, and that continues to do so. And we've also seen multiple support points above that, which also suggests shares are ready to head north. A weekly close above the 200-day line today, that's just around current levels, could seal the deal on a potential move higher, maybe early next month. On to a stock which doesn't get that much airtime here, but here it is today, i-nexus Global, and here we've got another bullish divergence situation, so the uptrend line there in the RSI window for September, so new lows there at the end of last month, but the RSI higher, so that's all good. Looks as though we're in a broadening triangle from back in August, top of the triangle there at 8p, which may not seem like too much of an upside, but I think it'd be quite a relief given the way that shares have been down below 4 pence briefly last month, and ideally we don't want to see the shares back below 4 pence ahead of a move towards 8 pence over the next month or 6 weeks, something like that. Stock which is, I don't think it's appeared very much here at all, but here we have it, Light Science Technologies, and here bullish divergence, that lower April low but higher RSI, so that's good. We've broken the resistance line there from January at 11 pence, and have now broken the 50-day moving average at 12 3/4. Weekly close above the 50-day line, and we could or should be heading towards the top of that broadening triangle from December as high as 23 or 24 pence by the end of next month. But the real kickers here, the trendline break, the falling wedge break, and the bullish divergence for the RSI, which tends to be a decent signal, as we'll see in some of the other stocks today. On to Netscientific, and here we went really oversold there back in March, but we've broken that resistance line there a week or so ago at 62 pence, and also the 50-day moving average around that level as well. Above the 50-day line, we're looking for the shares to return to the area of the 200-day moving average at 99, which seems to be a bit of a punchy call, but after all the declines we've seen from last June's peak. Maybe the shares are due a revival. We've certainly broken recent support, rather recent resistance, around 67 pence, and we're back above that last gap there as well. So above 62, looking for 99 or so on Netscientific over the next month. Another stock which doesn't get much airtime but makes it on a quiet day is One Media. Here we've got a bear trap gap reversal. So the old low there in September around 6.5 pence. We've gapped up back through that after two new lows, so that does suggest a low is in place. I suppose the obvious thing to do is to look for July resistance around 9 pence as the next destination. But as I said, a bit of a thin day, not an ideal stock to look at on a technical basis, rather illiquid, but the signals are there, positive signals are there at the moment. On to Pure Gold, which I shied away from early in the week because obviously it's not had a great run and looked like one was sort of trying to catch a falling knife, but we bounced off that line of support from October. That was around the 10 pence level and above the initial high there, which was 14. Looking for the shares to zigzag back up towards the at least the 50-day moving average area at 33 pence, which was the old February support. So I think that'd be a fair, if optimistic sounding target for the shares over the next 4 weeks or so. Onto a stock which has rather large macro problems. Here we've got Petropavlovsk up 21% on the basis perhaps of the trend line break that we've seen here. Here we've got the shares breaking the late March resistance line. That was around the 2.25 pence level. And above that, maybe we can squeeze back up towards the 3 pence area, which was the last resistance on the way down. But not that one, not for widows or orphans, I would suggest. Stop loss back below the broken resistance line, so really back below 2 pence is probably going to cover it if you can afford that or risk that. On to Quadrise, and here we had a good run via a gap to the upside through a resistance line, so that gave us what was around 1.6 pence. Good rally since then, and hitting the 200-day moving average and gapping down again. So what we'd like to see now is an end-of-day close back above the top of the gap there. That's at 2.52 pence. So if you can wait for that, maybe that would be a decent momentum trigger so that we can target the 3.25 pence area maybe by the end of next month. Positive here as well, the bullish divergence line, which has been in place since back in November, and also the way that the 50-day moving average is right. Going on to a stock which is also showing off the merits of bullish divergence. Here we've got Rockfire, which the bullish divergence line really in place since the end of February. The shares kept on going down, but the RSI kept going up, and we finally broken the trend line there from the end of February, and the 50-day moving average at 0.42. Above that, as I tweeted yesterday, looking for 0.58 or towards 0.6, which was the initial resistance for 2022 on the shares. But above 0.42 in the 50-day line, certainly looking like at least an intermediate rally for the shares. As I said, a thin day, so stuff which normally doesn't make the grade is making the grade today. Here we've got Sealand Capital, which used to move in the good old days. Here we've got bullish divergence with the lower low for April, but a higher RSI. And all we really need to do now, or what we'd like to see happen now, is a decent weekly close above the 50-day moving average at 0.58. If we can do that, then the target over the next couple of months could be as high as 1.1 pence at the top of that August broadening triangle. Finishing off with a stock which I know is a favourite amongst the cognoscenti, the FinTwit people. Here we got Thor Exploration and or explorations rather, and here you can see there's a broadening triangle, top of the triangle there from August up to 24 pence, and that's valid while we hold above recent support around 17 pence. So a pretty simple setup there. The other point to note really is that bear trap gap reversal. So we gapped down at the end of January and then closed above it, and that was really the starting gun on the latest move versus 14 pence. And that's where the bullish divergence came in for the first time. So we've been set fair pretty much since then, and 24 pence I'm sure will be appreciated by those in at the lower levels. That's it from me today. More updates over the weekend.